everyone, and welcome to another installment of Barry Dunn's ongoing podcast series with a specific focus on issues and topics relevant to not-for-profit organizations. I am Joe Byrne, and I am once again joined by Emily Parker and Katy Balukas. Good morning to you both.
Good morning.
Good morning. Happy to be here.
Happy to be here with you both again. Today's topic is kind of maybe a part two, as it were, to a conversation that we had previously on uniform guidance audits. The first topic, the first session that we did was more about uniform guidance findings. Today's topic is going to be more so leaning towards those organizations that are undergoing a uniform guidance audit for the first time. So that first time single audit. Now what do we do? More or less is the topic of today's conversation. So with that, Emily, I know that with regulations, COVID funding, infrastructure funding, that's where we're getting a lot more calls for folks that are thinking about UG audits or hearing about them for the first time, right?
Joe, you're right. We are hearing from a lot of organizations that have to have uniform guidance for the first time. I always think of this as like a reminder that it might be an additional compliance requirement, but really it also is in recognition that you received some significant funding that you didn't have before. So a uniform guidance compliance audit is, it's important and it's a big deal, but it's something that your auditor can help you get right and you can be prepared for ahead of time.
Yes, and we've seen an uptick in organizations really needing these. Like Emily said, with the COVID funding, there's specifically ARPA funds and then other grant funds that have come out of the Act overall. And really one thing to keep in mind is that obviously from a not-for-profit perspective and governmental entities would be subject to a uniform guidance audit, but even some for-profit entities are meeting these requirements now under these new federal funding sources. And so the Office of Management and Budget did issue an alternative compliance examination requirements that can be used when an organization is subject to one of these reviews for the first time. And it really is easing the burden of a full single audit or a full program specific audit. So if you think you're meeting those requirements, I would encourage you to talk to your auditors to see if that's an option for your organization to either save some time or money as it relates to undergoing these procedures. Another thing with these first time uniform guidance audits is just really being mindful of your grant funding to determine whether you're a subrecipient, a contractor, or a beneficiary. It may not be clear when looking at your grant agreement whether you're a subrecipient, contractor, or beneficiary, but each one of these categorizations does have a different requirement as it relates to whether you're subject to uniform guidance or audit or not. So really having conversations with your auditors up front about any new funding streams so you can make sure that you're meeting the requirements and know whether you're subject to an audit or not.
But one thing that we do here also is because of this additional money that's coming through, as a reminder, uniform guidance relates to federal funding. It's expenditures of federal awards. Sometimes this money will flow through states in such a way that it triggers a state requirement. So I know today we're really talking about federal requirements because state requirements vary really across state by state. But it is important to think about what are the requirements, if any, within the state where you reside. Does it trigger additional internal state reporting? So just keep that in mind as well.
So as the resident tax guy, I have a very light touch with anything related to uniform guidance. I think there are two questions on the 990, and I think they are literally, were you subject to a UG audit, and yes or no, and then did you have one? Yes or no. We always like to be able to answer both yes to those if the first one applied. So I guess from a 50,000 foot view, what kinds of organizations are finding themselves exposed to this for the first time, and how does an organization know if they need to have a UG audit? Like, for example, I know at least that I heard at one point in time, probably from one of you, that there was a $750,000 threshold. So maybe you could talk about that a little bit. Like, is there any sort of bright line that an organization should be aware of?
Yeah, so $750,000 is the current threshold for needing a uniform guidance audit that will be going up to $1 million this fall. but as of right now, it's $750,000. And one thing to keep in mind is that it's really based on what's been expended. So there are some funding sources that will give you the grant dollars upfront, while there's others that you draw down on the funds as expenses are incurred. So that's one thing to make sure, that it's not $750,000 of grant funding received, but $750,000 of grant funds expended is what triggers the uniform guidance audit. So the funds will then go on your CFA, which is your schedule of expenditures of federal awards, which really tracks your grant funds by assistance listing number, the grant name, as well as the expenses for the given period. So that's one thing, is just to make sure that that is included on there, and making sure that if you're over the $750,000, then that's really when you need to start having the conversation with your auditors of the additional requirements.
That's a really great point, Katie, too, around that CFA is the expenditure language that we use for federal compliance audits under uniform guidance is not the same as just an expense that we're used to in regular accounting. So it does take into effect certain loans, certain other types of funds that we wouldn't necessarily consider expenditures, capital projects, things like that. One way to know when you look at the contract agreements that you sign is there, if it's federal funding, is quite often should be an assistance listing number. It might be an AL number, which is a 2-digit and then a dot and then 3-digit number that helps identify both the federal awarding agency and the specific requirements of that agreement. So that's kind of in the weeds. But if I were you and I were looking for to look at my contracts and figure out, does this apply to the uniform guidance? Will this potentially trigger a uniform guidance? That's one thing I would keep an eye on as well.
I think, Emily, you may have also mentioned this before in your kind of your opening remarks, but is it possible that state funding or, money coming from the state can in fact be federal money? Like, is there anything there, or am I just completely off base?
No, you're exactly right. Oftentimes, the states receive a pool of money that they are charged with distributing to organizations within their state. So quite often, state money can be from the federal government. So it would be a pass through the state. The contracts with the state should outline that. It should make it clear that the State Department is passing through this federal funding. And so you would keep an eye on that as well. You would include that in your CFA in general. That usually would need to be included.
Okay, so organizations, be aware of that. Good thing we have folks like Emily and Katie that can help with these sorts of things. Okay, so what should organizations do to be sure that they are ready for one of these UG audits?
Yes, I mean, in the audit world, one of the big things we always harp on is policies and procedures, making sure that you have clear documentation for your policies and procedures. Another thing with uniform guidance is when we're doing uniform guidance audit, we have to look into not only the compliance aspect of, did you spend the funds according to the grant agreements? Did you, if there's eligibility requirements, did you service the correct people based off of correct groups of people based off of the specifics of your grant agreement, but also making sure that there's clear documentation for the internal controls related to each of the compliance requirements. And that goes beyond the cash disbursement side. So a lot of grants have reporting requirements. There's the reimbursement request, making sure that you have clear processes documented for who's preparing and then who's reviewing all of the reporting requirements. From an eligibility perspective, if you have grant dollars that you're required to service specific populations of people or clients, making sure that you have clear documentation of who is making the eligibility determination and then who's reviewing that documentation. So that's a really big thing, is making sure that there's policies and procedures, but also there's procedures for the internal controls surrounding all your compliance requirements. We did mention the schedule of expenditures of federal awards. As required from an auditing standpoint, that's something that our clients should be preparing. So making sure that you're preparing that and updating it on a monthly basis. Certainly have conversations with your auditors if you're uncertain as to whether something should go on your CFA as it relates to specific grants, as to whether you're a subrecipient, a contractor, or a beneficiary, but just making sure that you're preparing and updating that document to the best of your abilities. But then also making sure you're looking at your grant agreements. There's federal guidance out there, which is part 4 of the compliance supplement. There's also 2 CFR Part 200, which really governs all the federal funding. So really familiarizing yourself with all of those documentation to make sure that you're truly understanding your specific grant and then the requirements since you have received those grant funds.
So just a little bit to do then, right? Okay, so let's say we have one of these uniform guidance audits and you guys have a finding. What does an organization do there? And what would constitute a finding?
Sure. So a finding is really not uncommon in a first year uniform guidance audit. I'll put that up front just to sort of make that clear that it's not the end of the world to have a finding. We all want to do things well and in line with the documentation, but the uniform guidance requirements are vast and require some knowledge and expertise. And, all of the things that Katy mentioned, they are available online and are likely referenced in your grant document if you have trouble finding them. But let's say you have a finding, and I'll give you an example of one that I've seen recently related to suspension and debarment. Under the contract, an organization might be required to do some background checks of their vendors, of their employees, to be sure they aren't debarred from participating in federal programs. Let's say it comes audit time and you don't have documentation that you performed that test before you paid your vendors or your employees. That would, in many cases, in general, could result in a finding that needs to be reported to the federal government. And the uniform guidance reports are uploaded to the Federal Audit Clearinghouse at the end, so the federal government will see all the findings. The good thing there is a finding includes all kinds of information around the context, the impact. It really describes the finding in pretty good detail, but it also allows space and requires that management provide a corrective action plan as a result of the finding. And we encourage our clients to use that as an opportunity to showcase that they have realized that there was a mistake and they have already taken the steps to remedy that mistake. And so there is no one thing that will happen as a result of a finding, but in our experience with these agreements, showing the commitment and timely reaction to findings can really be beneficial, because these, like I said, these reports are uploaded, including this corrective action plan, and they're publicly available from that site. So really, it's a good opportunity to showcase how seriously you take the findings and how you are working hard to remedy them. So no one likes to have a finding in their organization's report. It is a fact of life in many audit reports. So it's not the end of the world, but something that you deal with and work with to remedy quickly if you can.
Yes, and I think one important thing, Emily, that you mentioned was the timeliness of addressing the finding itself. If you have findings that are repeat findings year after year, that's when you'll likely gain some attention of the respective federal agency. But having a finding, working through it, showing in the next year that it's been resolved is really the best case scenario.
As the layperson on this call in this area, I guess I have a follow-up. Let's say that you do have a recurring finding. Who is looking at these and what could happen? I guess it would be my question.
Well, there is no set answer to what could happen, because there are lots of things that could happen, and we may not even be aware of what they all are at this point. But generally what we see happen, because it is a fact sometimes that things repeat, there could be turnover, there could be lots of reasons why things repeat as a finding. And in those cases, what usually happens is it ends up in additional scrutiny from the department that provides the funding. So when you list the finding under suspension and debarment, let's say it's a DHHS department that funded the program with the finding. It could be that department reaches out and says, okay, we see you've had this 2 years. Let us know what the corrective action plan is. They might schedule a visit more frequently than they would otherwise. I mean, the long-term result is you could stop participating in that funding source, depending on the nature of the finding and lots of different factors. But it does draw more attention. There is no immediate penalty like you might be used to seeing, Joe, in the tax world. If you don't file this by this date, it's $100 a day. There's nothing like that
Exactly
I'm aware
right.
of. Yeah, there's nothing like that I'm aware of. It's a bit more broad and nuanced. So we can't say in general what the result will be. But what I have seen in my client base is that if things aren't cleaned up or if, the reaction isn't what they expect. And as far as timeliness goes, the departments will likely put a little bit more attention on your agency. We all know we only want positive attention on our agencies from the department, right? If we want to continue getting funding, but they definitely are, they want to work with folks. In my experience, that's what I've seen. They want organizations to be successful.
I'm also curious too, coming from the 990 realm, where we live in the world of public disclosure, are findings ever made public at any time by the federal government? Can folks go out and find these findings, as it were?
They are all 100% public. You can go out to the Federal Clearinghouse and look for any organization's financial statements, uniform guidance report today. They are public, very much like the 990 requirements there. Yeah.
To go along with the findings being public, the corrective action plans that are required to be submitted when you do have a finding, those are also attached to the report that is publicly made available. So not only can anybody searching your organization see any previous findings, they can also see management's corrective action plan, but also right within the report, it does say whether it's a prior audit finding or a new audit finding. So really you could look back years and see any findings, how fast it was resolved, as well as any new ones and what the status of those is. So all that information is public, but also your corrective action plan is also provided right there and made publicly available.
That is good to know. I am learning lots here today. Any other thoughts, Emily or Katie, before we wrap up today's episode? Any parting thoughts or comments that you would like folks that are maybe on the, I don't want to say they're on the fence, but that may be headed towards a first-time UG audit? Any final thoughts?
I mean, I think one big thing that I always encourage our clients is if you are in the process of receiving a new grant, is have that conversation with your auditors up front. So one, they're aware of the new grant funding, but also so they can start helping you within the realm of independence, but be able to start being a resource for really being upfront on the compliance requirements overall. Upfront communication is always the best. So making sure that they're aware of the new grant funds and can help you along the way as it relates to really that first year and working through the new compliance requirements associated.
It seems like a recurring theme whenever we're talking about any topic, the importance of communication and documentation. It really just seems to rule the day, kind of regardless of what the issue is. So I think that's a really nice thing to end on. With that, I'd like to thank Emily and Katie for the candid conversation today. Really do appreciate it. And I would strongly encourage any listeners of this podcast or any of our other previous podcasts to go check out our website, barrydunn.com. We just recently held our Recharge 2024 annual not-for-profit summit. So if you go to our website, you can find slides and recordings of all the great presentations that were done on that day. And you can also go find our other podcasts as well as newsletters, which you can also sign up for all through our website. Until next time, I'm Joe Byrne. Thanks again so much for listening.